Good morning, good morning, good morning. It is Monday, the 11th of August. All day you join myself and the magnificent Mr. Michael Brown for the morning blast, where as normal, think of it as more bar side than fireside, and we just go through what's been happening in the markets over the weekend, all the news, and a preview of today, and as it's Monday, a preview of the week ahead. But before we do, I'll get the legals out of the way. Nothing discussed on this Spaces session constitute trading or investment advice, or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed the magnificent Mr. Michael Brown. Hello, Mr. Michael Brown.
Oh, well, very good morning to you, Ryan. Good morning, everyone. I'm glad to see you're fit and well and firing on all cylinders this morning. I can only hope that the passport office is doing the same.
Well, I've already just put my head in the door. Yes, it's all looking good so far. Cutting it very fine today, though. For anyone not aware, I'm at 9 o'clock. I go and get my new passport. Well, I apply for it at 1 o'clock this afternoon. I should be getting it, and at 5 minutes, I should be wheels up, leaving this small town shithole and getting off to a big city.
Have you already found a volunteer to help lift you up so you can get to the right height for the camera to take your photograph?
I took it myself from my phone, you cheeky shit. Anyway, enough about me. How are you, my friend?
I'm not too bad, mate. I'm not too bad at all. Shall we crack
Good.
on? Because I
Yeah,
do
let's
actually
do
have
it.
quite a few things to mention
And
this
I've
morning.
got a hard stop at 9 o'clock.
Well, indeed, and you're going to have a panic attack otherwise. So let's crack on. I'll start with markets actually, because I think Friday was like the most summer Fridayist Friday ever, given the price action that we saw, or lack of it, to be completely honest with you. Equities grinding higher, most of those gains coming after European participants had gone home for the week, which happened probably about 1:30 in the afternoon, given how dull things were. But nevertheless, the Nasdaq rallied about 1% on Friday, closing at a fresh record high. Markets elsewhere not going anywhere too fast, to be honest with you. Some modest selling at the long end of the Treasury curve, although that has unwound this morning as trade gets underway after a Japanese holiday. The FX market just plodding along in a relatively tight range, and the same can be said for gold and for crude benchmarks as well. That said, there have been a few catalysts over Friday and also over the weekend. We may as well start on the trade front. The first is on gold, actually. There was a lot of consternation among gold traders on Friday, particularly in futures. The FT reported on Thursday that certain types of gold bullion bar are going to be subject to tariffs, and the US Customs and Border Protection Service confirmed this on Friday, saying that any gold bullion bars of a kilo or 100 ounces will be subject to code 7108 spot 13 spot 5500H. Now, to translate that into something
There's a
resembling
quiz at the end,
English.
everyone. There's a quiz at the end.
Indeed. To translate that into something resembling English, it basically means that the classification of these gold bullion bars means that they will be subject to the reciprocal tariff of whatever country they're coming from. And obviously we know a lot of gold comes from Switzerland. Switzerland are subject to a 39% tariff. Everyone was pretty much expecting that gold bullion would be exempt from these tariffs, so this did come as a bit of a shock. As a result, we saw the spread of futures over spot blow out ridiculously. Futures actually trading to a record high because they've basically become a supply play. That's a storage play. That's all the gold future has become.
Yeah.
If anyone is trading them, then this is obviously something to pay very, very close attention to, although there have been reports late Friday and also over the weekend that the White House are going to, quote, clarify this stance, which probably means they're going to pull a U-turn on it because of the market dysfunction it has
Also,
caused.
just something like this, these big banks or whoever it is were holding bullion. Yes, you're right. A lot of them have reserves in Switzerland, but also a lot of them have reserves in the Bank of England. So it's very easy gold is fungible, right? So it's very easy if you're company A and you need to import into the US and you've got a load of gold bullion in Swiss vaults. Company B has a load of gold in the Bank of England. You could just do a swap between the two of you, and then then technically straight away you own the gold in the Bank of England's vaults, and that's subject to a lot lower tariff. So how they're going to kind of enforce this, and this seems like this throw some ideas at the dartboard and see what sticks, and then when they see the market reaction, they go, hang on a second, maybe we haven't thought this through that much.
Yeah, and I think, to be honest with you, that's why they'll probably end up pulling a big U-turn on it. Although what I
Yes.
will be doing is keeping a very close eye for any large lorries moving around outside the office near Threadneedle Street today, just to
Oh, you mean
see
those
if.
ones? You mean those ones surrounded by like undescript kind of Range Rovers with guys that look like they're from Hereford all around
Yeah,
them?
those are the ones. And just some random helicopters overhead as well, for good measure.
Yeah.
So I'll keep a close eye out for that. In terms of other bits and bobs on the trade front, Treasury Secretary Scott Bessent, he gave an interview to the Nikkei yesterday, Sunday. He was saying a whole host of various things, but the main takeaway from this is he said that he sees trade talks being largely finished by the end of October. Just to recap, the original trade deadline was the 2nd of April. That then became the 9th of July, which became the 1st of August. Then we had Bessent saying Labour Day. Now he's saying the 31st of October. I think he's just going to be getting a sore foot at this point from the number of times he's kicked the can down the road, but this really shouldn't come as a surprise at this point. Sticking with trade and moving on to China, the FT reporting this morning that Nvidia and AMD, they're going to be having to pay 15% of any revenue they make on chip sales to China to the US government. Effectively, this is a quid pro quo that they've negotiated whereby the government and the Trump administration have gone, okay, we'll lift export controls on your chips going over to China, and in return, they want 15% of any of the revenue that is made on
I
those
take
sales.
it's also a first sign of tariffing exports, which is something I didn't think we would see.
Yeah, absolutely. So that's certainly something to watch to see if that becomes a more sort of popular idea. The other thing that's happened on the chip front is over the weekend, I did see some reports that the Chinese government have said that actually Nvidia's H20, I'm going to call it H2O then, H20 chip, that is apparently not safe for use in China. So despite the US having lifted their export controls, it looks like they may not actually want them
Yeah, just
anyway.
further on that, that's over security concerns. How ironic. After Beijing raised concerns over backdoor access, and we will have a bit of backdoor access on this show.
No, it's all right, because Tom Talks Cars told me that there's none of that going on with AI, so I believe him.
But I guarantee I've seen some people involved in AI. There's definitely some backdoor access going on. But anyway,
Oh,
moving
God.
on.
Moving quickly on. The last thing just to mention on the trade front is Trump has been ranting away on Truth Social this morning, saying that he hopes China will, quote, quickly quadruple its soybean orders. Soybeans are a way to reduce China's trade deficit with the USA. And if China were to do so, rapid service will be provided. Two reasons why this is important. One is because if you think all the way back to 2019, that was what China pledged to do back then in terms of massively ramping up their orders of US agricultural products, and basically they didn't do it. The second reason why this is important is because, and it seems to have escaped absolutely everyone's notice, the China trade truce, where the US and China have agreed to sort of pause tariffs on each other, that is due to expire tomorrow. And as of yet, I don't think we have any particular clarity on that being extended. Everyone is pretty much pricing in the certainty that the can is again kicked down the road on that front, probably for another 90 days. At least that's what Commerce Secretary Lutnick was alluding to last week. We don't know whether that is actually going to happen or not. So obviously there is going to be quite a lot of focus on that as we move through the day to day. And I think one thing that this does raise the prospect of is whether we end up in a world where effectively the extension happens, but only as a result of
Right.
China agreeing to make various agricultural purchases that, let's be honest, they'll probably never follow through on.
And speaking of agricultural purchases, I see Angie. Good morning, Angie's on the show. Obviously, tune into the Grain Market Blast later on today.
Well, that's a very early start for her, but very good morning nonetheless.
Well, she's an
Move,
absolute grinder, as in
unlike you.
workaholic, before anyone says anything. Yeah, well, what do you mean? I'm standing outside the passport office.
Oh, what, you work there now?
Yeah, I'm outside right now.
Right, moving on from the trade front, in terms of data, it was a relatively quiet day on Friday for economic releases. We did have the latest Canadian jobs report, though, which was a bit of a shocker. The Canadian economy losing almost 41,000 jobs in the month of July, but unemployment did unemployment did stay at 6.9%, contrary to expectations of a rise to 7%. Nevertheless, didn't impact BOC pricing too much. What the Bank of Canada do next hinges much more on any tariff developments as opposed to any issues in the domestic economy or in the labour market. In terms of other catalysts and notable headlines, I'll let you cover this in slightly more detail, right, because it's slightly geopolitical in nature. But President Trump and President Putin, they're going to be meeting on Friday in Alaska.
That's
This
about there all is
is
to say. Thanks,
yeah,
bro.
sorry, mate. Of course, this is as Trump continues to try and find some way to a peace deal in Ukraine. There were reports towards the back end of last week that the US and Russia were looking to basically put in place a deal that would kind of freeze the front lines where they are, and basically cede Ukrainian territory to Russia, which unsurprisingly Zelensky is not a particular fan of. And I believe Zelensky hasn't actually been invited to this meeting in Alaska, although that may change as the week goes on. Sticking with the United States, the Wall Street Journal, they reported late Friday that President Trump now has 10 names on his shortlist for Fed chair. Of course, this comes just a day after Bloomberg were reporting that Chris Waller is the favourite for that position. I did say at the time that the favourite for the Fed chair is probably going to change at least 10 times
Yeah.
before one is named, and so it would seem. The Wall Street Journal, their sources saying that this shortlist includes the names previously mentioned, such as Kevin Hassett, Kevin Warsh, Chris Waller himself, plus Mark Summerlin, who is a former George W. Bush economic advisor, and Jim Bullard, who was formerly president of the St. Louis Fed. Anyone who remembers Bullard when he was at the St. Louis Fed, he was doing about 15 media interviews a day, so that would be pretty unbearable. I do think that is an interesting name, though, and the reason why is because a certain Chris Waller used to be Bullard's number two at the St. Louis
Oh,
Fed. He ran research back then, so I do wonder whether there might be something in that. But again, the race for Fed chair it's not over until the fat lady sings. Just on the Fed, because obviously we were all away on Friday, Trump did announce that Governor Kugler's spot on the board, that is going to be filled until the end of January by Steve Moran, who is currently chair of the Council of Economic Advisors. If that doesn't tell you that monetary policy independence is being eroded at a rate of knots, I don't
yeah,
know what will.
absolutely.
A couple of other things from me just before I wrap up this morning. The Wall Street Journal again, their sources reporting that the US is preparing for an IPO of Fannie Mae and Freddie Mac later this year. That could be known as, quote, the Great American Mortgage Company. The one benefit of this is it does seem that Bill Pulte is now getting all excited over that on Twitter and has stopped calling for Jay Powell to resign, but we'll see how long that lasts. And
I
last
do you know what? No, no offense to the geezer, but when it floats, I hope he gets sacked straight away, or like the investors say, "Look, sorry, you got to fuck off. You're an absolute retard."
I really
Um,
hope so.
I'd love that.
And also, actually, we can skip the no offence to Geezer. Offence meant. I hope it hurts him
Yeah, yeah.
because
I don't
he's
know
a
why I
knob.
said that, to be
Uh,
honest, but it's Monday. I'm trying to start off polite. It's all going to fall apart in an hour or so, anyway.
Clearly. And last thing, but my name is Lisa from me this morning. We did hear from the BOE chief economist Hugh Pill on Friday. Of course, the BOE delivering a 25 basis point bank rate cut at their August meeting on Thursday. Pill noting that, I quote, a clear decision was made to cut interest rates. Not entirely sure which meeting Mr. Pill was talking about because the decision was so unclear that the MPC actually had to vote twice for the first time in their 30-year history in order to get a majority in favour of a certain decision. And Mr. Pill voted against that decision on both occasions. So the Bank of England finding themselves in a pickle once more. And for the time being, that's all from me.
Thank you very much. Well, I'll rattle through some of the select headlines from the overnight news roundup because obviously I need to get in the passport office and get my passport. As always, do follow our dear friend Zach Eisman on Twitter. Do subscribe to the Substack. It is the best way to get all the headlines that you might have missed overnight. So, in terms of trade, Michael's pretty much covered the trade headlines, so I'll move on to macro. US companies have so far absorbed most of the cost of Donald Trump's tariffs, but the burden is increasingly going to shift to consumers. That's according to research by Goldman Sachs. Fed's Bowman said recent week job data underscores her concerns about labour market fragility and strengthens her confidence in her own forecast that 3 interest rate cuts will likely be appropriate this year. China's producer prices, they fell more than expected in July while consumer prices were unchanged. This underscores the impact of a sluggish domestic demand and persistent trade uncertainty on consumer and business sentiment. That's from Reuters. ECB officials, they will wait until December to deliver their next interest rate cut in what is likely to be the final move in the cycle. That's according to a Bloomberg survey. In geopolitical news, Trump will meet with Russian President Putin on August 15th in Alaska. As Michael said just now, still no word if Zelensky is going to be invited or indeed turn up. A Chinese ship targeted by Philippine Navy with water cannons near the disputed shoal in the South China Sea is an escalation of tensions after Beijing protested the Philippine president over his remarks on Taiwan. Stocks, before I hand back to Michael, Intel CEO Lip Bhutan is set to visit the White House today to meet Donald Trump. Obviously, I think it was this weekend or maybe Friday, Donald Trump called for him to resign, so that'd be an interesting one.
Well, actually, just
HK Hein,
sorry,
go
I know
on.
you're trying to rattle through this, but just quickly on the Intel blow, I was thinking when Trump started calling for him to resign, I was thinking, oh, what's going on here? Did a bit of digging. Apparently, Reuters have investigated this chap. He's made $200 million worth of personal investments in Chinese firms, the majority of whom are to do with the Chinese military.
Oh, hello.
Yeah,
Yeah,
quite.
okay.
And he's running,
Uh,
one of the biggest chip firms in the US. I mean, that's mental.
yeah, that's a bit of an interesting one. Good insight. HK Hynix forecasts that their market for a specialized form of memory chip designed for AI will grow by 30% a year until 2030. So potential massive growth there for them. C3.ai Inc.
Oh
released
yeah.
preliminary first quarter revenues that fell far short of analyst estimates and restructured its sales management team. Never heard of them. China's battery giant CATL said on Monday it suspended production at a major lithium mine, sparking a surge in lithium futures and miners' share prices amid broader crackdown on overcapacity. The overcapacity of lithium stocks, that's been something that's been bubbling away for quite some time. China's property stocks, they rose in Hong Kong after Beijing scrapped long-standing restrictions on the number of homes city residents can buy in suburban areas. And that looks about it for me. Back to you in the studio, whilst I might try and slyly join the queue whilst you're still on the blast.
Good stuff. Thank you, Ryan. Right, while you go and slope off into a queue somewhere, I will preview today and also the week ahead. Although the preview of today isn't going to take particularly long because there are no notable economic data releases on the docket. There are no corporate earnings of note, and there are no central bank speakers of note either. So if you're looking for a day to get some life admin done or some paperwork or whatever it is you need to do, like renewing a passport, then today is probably the perfect day to be doing it. The rest of the week is somewhat busy though, just to go day by day. Of course, tomorrow we are looking out for the scheduled expiry of the US-China trade truce. I believe that is due to expire at midnight Eastern time, which is 5 a.m. here in the UK. Again, I fully believe that is going to be extended, but we haven't had any confirmation of that just yet, and we obviously await news on that front. In terms of other scheduled events on Tuesday, we're likely to get a 25 basis point rate cut from the Reserve Bank of Australia, lowering rates to 3.6%, having surprisingly kept rates on hold last time out at their July meeting. Here in the UK on Tuesday, we get the latest labour market figures. Unemployment is seen holding steady at 4.7% in the 3 months to June, while earnings growth, both including and excluding bonuses, is set to tick back below 5%. Also on Tuesday, we get the latest ZEW sentiment surveys out of Germany, and the headline release on Tuesday, and in fact the headline release for the week, that comes Tuesday afternoon in the form of the latest US inflation figures, where headline CPI is seen rising to 2.8%, up from a prior 2.7%, and core CPI, that's seen rising to 3%, up from a prior 2.9%. Of course, focus in that inflation release is going to be on the core goods CPI metric, given that is where we will see the signs of tariffs being passed through in the form of higher consumer prices. Also on Tuesday, notable earnings come from the likes of CoreWeave after the market closed, and not forgetting before the market opened tomorrow, Pony AI report earnings 10:15 London time. Stand by your
Pony!
desks. Into Wednesday, it's another pretty barren economic docket, although we do get earnings from Cisco and a handful of Fed speakers as well. Into Friday, Australian jobs data is due, as is the first read on Q2 GDP from here in the UK. The economy expected to have grown by a paltry 0.1% on a quarter-on-quarter basis in the 3 months to June. That would be a pretty chunky slowdown from the 0.7% pace of growth we saw in Q1, although of course that was propped up by tariff front running and people bringing forward home purchases before the stamp duty changes and all of that other nonsense. Also on Thursday, we get a policy decision from Norway, where the Norges Bank are set to hold rates steady at 4.25%. We have GDP figures due out of the Eurozone, although that is a second estimate on the Q2 GDP number, so not expecting any revisions there. And then stateside, On Thursday, we have the latest PPI figures and also the weekly jobless claims stats, which continue to attract more attention than usual, given the dismal July jobs report that we had about a fortnight or so ago, and how participants continue to try and gauge whether cracks are emerging in the US labour market. And then last but by no means least, moving into Friday, we get a bit of a data dump out of China. Retail sales and industrial production figures are due. We also have retail sales out of the US, which are expected to have risen by 0.5% on the month in July, pretty much unchanged from the 0.6% that we saw in June. And also on Friday, we have the latest US industrial production stats and preliminary consumer sentiment for August from the University of Michigan. And of course, as we move through the entire week, we are looking out for geopolitical headlines ahead of that Trump-Putin meeting in Alaska on Friday, and also trade headlines ahead of that trade truce deadline tomorrow, and also as Treasury Secretary Bessent talks about potentially trade negotiations running all the way to the end of October. But for the time being, that is all from me.
Wonderful, Michael. Thank you so much. Wish me luck getting my passport and so I can get out of this hole. Yeah, we'll see what happens. I'll keep you updated. Thank you,
Please
my
do.
friend. Listeners, thank you as always. Yeah, we'll see you all tomorrow, hopefully.
Bye for now.